Australia is at risk of Sri Lankan chaos and revolution. Martin North, John Adams, in the interest of the people. John, hello.
Hello, Martin.
Very important conversation this. Sri Lanka's in the middle of it.
Absolutely. Extraordinary scenes over the weekend in terms of what we were seeing out of Colombo. It was, Twitter in particular was alight on Saturday and Sunday as the Sri Lankan people had enough of a poor government as well as a collapsing economy. And they basically took out their frustrations on the Sri Lankan president. They stormed the presidential palace. I have to say, we were just saying off camera, Martin, how well this Sri Lankan president is living. Huge building.
Yes, amazing swimming pool.
It's an amazing swimming pool. I've seen some of the pictures of the bedrooms. I mean, our Governor General and Prime Minister don't live as well as the Sri Lankan president. The other extraordinary thing is it was seen by the world press as an attack against democracy, 9/11 or Pearl Harbor, when there was a storming of the Congress in America on the January 6th, and yet the world press has said little about the Sri Lankan situation where they stormed the presidential palace. But they also, fun enough, stormed the Sri Lankan central bank as well. So all of the key institutions were attacked. The Prime Minister has resigned. The Finance Minister attempted to escape, who's the brother of the President, and he was stopped by airport officials and protesters. And we have complete chaos in Sri Lanka. And one of the important things that I want to bring to the audience's attention about what led to the Sri Lankan collapse is we've covered this whole spectre of this subject back in 2019. So in essence, Martin, Sri Lanka defaulted on its foreign debt. Now, back in 2019, we interviewed Dr. Peter Brain about his book Credit Code Red, because Australia has a foreign debt problem as well. And his thesis of his book that he wrote with one of his colleagues was that we were going to potentially default on Australia's foreign debt, and that he was warning about that. And so I think what we're going to try to do today is explain to our audience what happened in Sri Lanka and what are the key lessons for Australia at the same time.
Yeah, no, I think it's a good conversation, bearing in mind that our foreign debt's probably somewhat bigger than it was, and there's a little bit of question about how this is going to play out here as well. So, good time to have this conversation.
Indeed. Now the other thing is that for those who have been following my work since 2018, if we can just put slide 4 on the screen, Martin. So we have in my economic Armageddon thesis, I had 6 scenarios. So one of the scenarios was a local currency crisis, and that's what that Peter Brain book was talking about, and that's what Sri Lanka has gone about as well. So this event of where you have rising interest rates and then you have a problem servicing your foreign debt. That was one of the things that I wrote about 4 years ago, and that has come to pass in the context of Sri Lanka.
And it was ticking away for a little while, but really it's been the last few months that Sri Lanka's really had huge issues. And of course, as you say, it's turned into a set of social issues as well as a set of financial issues.
Absolutely. One of the key metrics that our audience needs to remember is that anytime you've had a collapsing currency where there's been a default on the foreign debt, the key metric that comes up time and time again is when net foreign debt is above 50%. So when I looked at the Sri Lankan situation in the last couple of days, what I found was that at the end of 2021, foreign debt as a proportion of Sri Lankan GDP was at about 60%. So their foreign debt was about 51 billion US, and the size of their economy was around 85 billion. So we get to around 60%. Now, in the context of Australia, for the last few years, we have been above 50% in terms of our net foreign debt. In the last quarter, we actually came down a bit. So a few years ago, around 2018, 2019, net foreign debt as a proportion of GDP in Australia was 60%. Now, at the end of the December quarter of 2021, we were at 55%, and we've had a bit of a dip. At the end of March quarter, we were at 50.13%. So it looks like we've had a slight improvement in our foreign debt position overall, but it's still above this danger zone. And because it is above that danger zone, we have a big issue in terms of the foreign debt. But obviously, one of the things that you and I have been debating over the last couple of days is, the RBA raising rates. Is part of the motivation is to maintain confidence and stability in the dollar, because as we'll go through this in a second, what happened in the Sri Lankan context was that runaway inflation led to a collapse in the Sri Lankan currency, and that ultimately led to a default of their foreign debt. So, maintaining confidence and value in your currency is critical. Otherwise, you start to spiral way out of control.
And the debt calculation, that includes public debt and private debt?
Yes.
Yeah.
Yeah. So one of the key things for our audience to understand is that foreign debt problems don't occur overnight. I mean, they take time to build. And so over the last few years, the Sri Lankan economy has had this huge foreign debt problem, and it has exacerbated with the COVID-19 pandemic. So where a country gets into problems is when you don't have enough foreign exchange reserves. So basically enough reserves of foreign currencies. So when your foreign bills come up, that you don't have enough to pay them. Now, in the context of Sri Lanka this year, 2022, Sri Lanka was required to pay, and is still required to pay, $7 billion of foreign debt. And as of April, they only had about I think $1.5 billion. So they basically have a depleted amount of foreign reserves, and that depletion of foreign reserves has gotten worse over the last couple of years. Now, two really big aspects in the case of the COVID-19 pandemic over 2020 and 2021. One was that they saw a major decline in tourism, and obviously if you have less tourists with less foreign currency coming into your country, you basically can't collect those foreign US dollars or Chinese yuan or euros, etc. And that was a big factor. The other thing is that they had they banned petroleum-based fertilizer, and this was a disastrous policy that led to food crops in Sri Lanka falling by about 50%, particularly in terms of rice. And so they had a major slump in agricultural exports, which again didn't allow them to generate enough foreign currency reserves. And so this is why this issue became acute, particularly in terms of the beginning of 2022. Now, in the case of the decision around fertilizer, now there is two schools of thought as to why Sri Lanka did this. One is that it was related to climate policy, and that there was some urging from the World Economic Forum to ban petroleum-based fertilizer. Another school of thought, and this is some of the Financial Times of London, suggested that they were nervous about spending foreign exchange reserves on additional fertilizer, and that's why they said, well, we need to try to keep as much foreign currency as we can without spending it willy-nilly. And they basically said to their agricultural sector, we want you to go organic and don't use fertilizer. But that was a disastrous policy. And these are the two key factors that led them to a point of crisis at the beginning of the year. Now, fast forwarding a little bit, obviously we've had surging inflation globally, and that inflation pressure has been feeding through to the Sri Lankan economy. So when you've got rising inflation as well as depleted foreign exchange reserves, Sri Lanka over the last 12 months have had problems with the importation and the production of food, the importation of fuel, but also in terms of medicine. And so now the other key point is Sri Lanka has had a fixed exchange rate. And so when you fix your exchange rate to maintain that peg, if you have surging inflation, and one of the things we've seen over the last 6 months is the surging US dollar, well, you need more US dollars to pay your foreign debt. And so the key critical juncture that led them to this point of crisis was that on the 9th of March, they couldn't maintain their exchange rate because they were bleeding too many US dollars and they were running out. And so they decided to release the peg. And what that meant was that the exchange rate collapsed, or the currency collapsed on the exchange rate by about 70%. So it was definitely a shock to the system. Now, at this point in time on the 9th of March, where in terms of the currency collapse, the central bank of Sri Lanka wasn't willing to raise interest rates to the appropriate level to maintain the value of the currency. So one of the things we've been saying over the last few episodes in terms of whether it's the US or Australia or some of the other economies, if you want to get inflation under control, you need your interest rates above the exchange rate. So prior to them surrendering this peg on the foreign exchange, inflation was ranging about 15 to 20%. Now, as the situation has unraveled in Sri Lanka, for June, inflation has now peaked at 54%. And for food in particular, inflation is running at 80%. And so basically, if you're poor in Sri Lanka, you can't eat. And we've seen a huge 75% of the Sri Lankan population has basically reduced their food intake over the last 2 months. And so people are very nervous about a humanitarian crisis happening in terms of Sri Lanka. So basically they had surging inflation, they had the rising US dollar, they didn't have enough foreign exchange reserves to maintain their exchange rate. They had all these bills coming due. And then they said, well, we're running out of money. We've got to release the exchange rate. Currency collapsed. Then what happened was they had protests because as your exchange rate collapses in value, that means the cost of imports go up. And because the cost of imports were going up, they were unable, starting from around March. I mean, so even though they had shortages, those shortages became much more acute because their various corporations didn't have the ability to borrow, so that they didn't have the ability to import fuel, food, and medicine. And so in early April, they ran out of medicine right across the country. They announced a state of emergency. The military was actually given orders by the president to shoot protesters with live ammunition. And again, when you have an economic crisis, what can inflame it is when the government overreacts. And so I think the political management was particularly poor. And then by late April, they announced that they were going to suspend payments of their foreign debt. And then on the 12th of May, they officially said that they were officially defaulting in terms of the foreign debt. And so since that point in time, the economic situation has just completely collapsed in terms of Sri Lanka. And that obviously has led to rising political tensions. And one of the funny things, Martin, is that the Australian cricket team is actually in Sri Lanka playing Test cricket.
They lost.
So you've had the economy in disarray. The political system basically collapsed. Millions of people storming, maybe an exaggeration, millions of people, but thousands of people storming the presidential palace, and the Australian cricket team's there. So parts of Sri Lanka is still carrying on with in terms of normal life, but the situation now is dire. Now, there's a couple of key reasons why Sri Lanka happened the way it's happened. One is that because of their foreign debt problems, back in, I think in 2019, 2020, they were downgraded by the international credit rating agencies. And because they had low credit, people didn't think that they were credit worthy, they were basically shut out of the international credit markets. So their ability to, now in the last couple of years, they have controversially taken some financing from China, but also in terms of India as well. But in terms of going out and trying to renegotiate these debts, they couldn't do it. The other thing is that the IMF offered a package. They offered to restructure, and the Sri Lankan president, right throughout 2022, said, I don't want to deal with the IMF. Now, the problem is now, and this is something that we discussed in 2019, that if you get into a situation where you require a bailout package from international institutions like the IMF, they then you basically lose your sovereignty, and they basically tell you, well, we'll give you the money, but these are the conditions that you have to abide by. And basically you have foreign creditors dictating your domestic policy. And I think maybe that was some of the motivation of the Sri Lankan president. He didn't want to give in to the IMF, but now that he's been forced to stand down, what that will mean is that the IMF is going to come in and basically reform the Sri Lankan economy to the dictates of the IMF and other creditors like the US, India, and China.
Of course, the timing of that is quite concerning given the global inflation situation. The costs of materials and food all around the world rising very strongly. And they've actually had power cuts and all sorts of other things going on in Sri Lanka through this time. And as you said, a lot of people, they can't get enough to eat. They can't afford to buy. So it's very precarious. And, again, to underscore it, it turns into a social issue. It isn't just an economic issue. This is hitting real people and real social issues. And that's why the various demonstrations that we saw happened.
Yes. I mean, the other thing is, one of the amazing things is we still, like we said before, we have 54% inflation, but the interest rates in terms of Sri Lanka is only at 15.5%. So when we were talking about in previous shows about whether it's Australia or the UK, European Union, Japan, etc., if you have soaring inflation, you really need to get that inflation under some sort of control by dramatically raising interest rates. Because if not, and you have a big foreign debt problem like Sri Lanka has. Now, Japan doesn't have a foreign debt problem. The EU has, obviously has foreign debt. We have a big, huge foreign debt problem because our net foreign debt is above 50%.
Yep.
Well, yeah. So if you don't raise interest rates to that level, you get this situation where you get into a default, and say. Where you see, so where, I mean, look, I think this is a key point, Martin, is because this is where some people get a little bit confused about hyperinflation. So whether it's Germany in 1923 or Zimbabwe or Venezuela, or now we're seeing this situation with Sri Lanka, the catalyst for hyperinflation is when the currency collapses on the foreign exchange markets. And then when that happens, your inflation rate, just like with Sri Lanka, it was at around 15%. Now it's 54%. And if they don't do something dramatic, it could quickly go to 100, 200, et cetera. And then you will see a complete nightmare scenario in terms of Sri Lanka. So while it's quite nightmarish now, the situation can get a lot worse. And one of the concerns that Peter Brain had, and if people haven't watched our show from 2019, I encourage people to go watch it, is that when you lose credibility with foreign creditors, then the very basic elements of life that we all take for granted, like food, medicine, and fuel, and all those basic necessities that we need to live on, no one will give you the money to buy those things, and then your standard of living will go through the floor.
Yeah, and food is running at, 80% inflation now?
80% inflation.
80%. So, you're going to want to buy in the morning rather than the afternoon, because if you buy in the afternoon, you'll have to pay more.
Exactly. Now, so what we need now in Sri Lanka moving forward, and obviously, part of the Sri Lankan situation, which is very interesting, is that obviously in years gone by, particularly in the Ruggill years, we had a lot of boat people coming from Sri Lanka trying to enter Australia via that way. And we've had a few boat attempts already. So the issue of refugees potentially could be, could be a big thing. But what the world needs now is an intervention where you stabilise the government, and you calm everyone down. But you also have some sort of rescue package where you renegotiate the debts and put the Sri Lankan economy on a more sustainable basis, so that they can try to function as a civilized society. So when we bring this to a close, Martin, is so what are the lessons for Australia? So we have a foreign debt problem. Now, we're going to cover this in a future post, but one of the big concerns that Peter Brain had was how much foreign debt do we owe within the first 12 months. Now, when we did the show in 2019, it was about 700 billion. I looked at it over the last 24 hours. We owe about 928 billion of foreign debt with a 1-year maturity or less. The amount of assets we have is about $250 billion short of that. And so we have a gap of our 1-year maturity foreign debt to the tune of 250 billion. And when you look at the foreign exchange reserves at the RBA, it's not that, it's only about 80 billion. So if we had a situation where our creditors lost confidence in our ability to repay, the amount of money we would have to stump up in a 12-month period, we're short 250 billion. The RBA doesn't have 250 billion to meet that gap, and we could easily go into a Sri Lankan situation if things were to unravel. And while some people may think this is perhaps a bit of hysteria in the case of our discussion vis-a-vis Australia, this scenario is what Peter Brain, who has a knack for forecasting crises, and we discussed that in the last post. This Sri Lankan situation is what he precisely predicted for Australia.
Right, and so the implication is that we are actually close to a very important tipping point, and if at some point our international investors lose faith in what we're doing here, then we could actually end up going down the same route, and it wouldn't take that much to tip us over.
Precisely. So while the RBA is saying we're going to raise rates in Australia to get inflation under control, and to try to slow down the economy, in the background, what the thinking at the RBA would be is if inflation starts to rage out of control relative to our peers, and if we keep interest rates too low, particularly compared to the Americans, the exchange rate's going to collapse, and that could have a balance of payments crisis like we did in 1985-86. And then at that point, then you have a really critical decision as to, do you save the currency? And by saving the currency, you've got to dramatically raise rates, not like we have in the last 3 months, but you basically have to go 5 to 10% very quickly, like what has happened in Sri Lanka. Or if you don't save the currency, then you end up in a foreign default, and then you have runaway inflation in the order of 50 to 100%. So these are the nightmare scenarios, but obviously we haven't sort of put ourselves in a good position, and so and again, one of the key messages we've been pushing for the last 4 years as we've been doing this show is a lot of Australians think that we have a standard of living which we earn or we are entitled to. No, the last 20 to 25 years, we have lived a particular way in Australia using a big international credit card, and in net terms, we owe the world $1.2 trillion. In gross terms, it's about $2.5 trillion. And so that's why we live the way we live, not because we produce goods and services and sell them to the world, that they want to buy our products at prices we can charge. It is because we are living beyond our means, and not just in terms of the household sector, government and the corporate sector as well. And so we've got a big international credit card that we have to pay, and so unfortunately we don't have anyone who is willing to come to our rescue at this point in time.
And of course, just to underscore, as interest rates internationally go up, the cost of that credit also goes up. So it's putting a bigger and bigger brake, if you like, on the activity and the momentum in the economy too.
Exactly.
John, we need to watch this very closely ahead, because these things could move quite quickly, and we'll keep our audience up to date.
Absolutely.
John, thanks very much.
Thank you.
Martin North, John Adams, Interest of Evil. We'll see you next time.